All right, let's talk about something that drives pretty much every trader crazy, market noise. Today, we're diving into a really powerful tool, one that actually comes from aerospace engineering that can help you cut right through all that chaos. Let's get into it. Oh, we've all been there, right? That sick, gut-wrenching feeling when you panic sell in a big, scary drop, only to watch it rip right back up the next day without you. It's one of the most frustrating things in trading. You know, it's so easy to just throw your hands up and blame the market for being totally random. But what if the real problem is staring back at you from your screen? What if the standard tools we all learn to use are just, well, too simple to keep up? Like trying to perform surgery with a sledgehammer. And that brings us to the usual suspect. The first indicator pretty much everyone learns, the moving average. But what if I told you that this simple, trusted tool could actually be the source of some of your biggest trading mistakes? Just think about it for a second. A 20-day moving average uses the exact same math, the same logic, whether the market is dead quiet or bouncing off the walls with volatility. It has a fixed memory. It's basically blind to what's happening right now. And this is where the problem really comes into focus. On one side, you've got this rigid, slow, fixed tool. And on the other, you have the real market, dynamic, chaotic, and always changing. It's a total mismatch, and that's where traders get into trouble. So it really all boils down to two massive flaws. First, lag. The indicator is always looking in the rearview mirror, so by the time it flashes a buy signal, the best part of the move could be long gone. And second, noise. In choppy markets, it gets you in and out, giving you a ton of false signals. But in a quiet market, it's too slow to notice when a new trend is just starting to wake up. So if our classic tools aren't cutting it, where do we look for an answer? Well, believe it or not, the answer comes from a pretty wild place, the 1960s space race. We're talking about an algorithm that was designed to guide rockets to the moon. It's called the Kalman Filter, and its whole job, its entire purpose, is to find the true signal hidden inside a stream of messy, noisy data. See, NASA used it to figure out a rocket's actual position from a bunch of imperfect sensor readings. We can use it to find a stock's true trend underneath all the chaotic price swing. So how does it pull this off? It uses this really clever two-step dance. First, it makes a prediction. It says, okay, based on everything I know, here's where I think the real trend should be right now. Then, the next price tick comes in, and it doesn't update. It compares its prediction to reality, and it uses that difference, that surprise, to correct itself and get even smarter for the next prediction. And this, right here, is the absolute magic of it. It's all about adaptability. Unlike a moving average that's stuck in its ways, the Kalman Filter is constantly learning. When the market gets noisy, it learns to trust its own predictions a little more. When a real, strong trend emerges, it pays more attention to the new price data and snaps into action. It gets smarter with every single trade. Okay, that's all great in theory, but what does this thing actually look like on a price chart? Because when you see it, that's when it all really clicks. Let's take a look. Okay, check this out. The blue line is the actual price, right? It's all over the place, jagged and noisy. Now, that green line is your standard 30-day moving average. See how slow it is? It's lagging way behind the action. But now, look at that orange line. That's the Kalman Filter. It's just as smooth as the moving average, but look how much more tightly it hugs the price. It reacts to the real turns way faster, without getting faked out by every little head fake. So what this means is you get the best of both worlds. You get the smoothness that filters out all the meaningless noise, but you also get the responsiveness to catch the big important moves early. It's not just smoothing the past, it's actively estimating the present. So, a better filter is awesome, but the real question is, how does this actually change the way we trade? How does it lead to a smarter mindset? Well, there are a couple of classic ways to approach it. For mean reversion traders, you can think of that smooth Kalman line as the fair value. So when the actual price gets stretched way too far away from it, you can place a bet that it's going to snap back. Or, if you're a trend follower, you can use that line as your new intelligent trend line. A clean cross could be your entry, and a change in the slope could signal the trend is shifting. But honestly, this is about way more than just one indicator. It represents a huge shift in thinking, from a world of fixed, rigid rules to a world of adaptive, intelligent estimation. It's about trading based on probability and confidence, not just blind certainty. And that leads to some really profound lessons for any trader. First, that being adaptable is way more valuable than trying to find one perfect setting. Second, that your real enemy isn't the market itself, it's the noise. Third, that you have to model uncertainty, not just pretend it doesn't exist. And finally, of course, no single tool, not even one this cool, is a magic wand. It has to be part of a complete trading plan. So I'll just leave you with this to think about. In a market that's getting faster and noisier every single day, maybe the ultimate, most lasting edge isn't some secret formula. Maybe it's just the ability to see things more clearly